For me, well, what I scream to the whole world is set up your team first before anything. Know who you can trust because I realize that it's being sold as a passive real estate investment opportunity. In reality, it's a business. You are the CEO of a real estate investment business. And for a person to shop around and find the cheapest of everything, it's like the CEO of a big corporation trying to find a COO, a CFO, and a CIO that's willing to take minimum wage. That company will not be successful if all you are is trying to find the cheapest of everything.
Welcome to the Real Estate Pros Show, where we interview real estate investing professionals from coast to coast, as well as the service providers that serve the real estate investing industry. Our goal is simple: share what's working now to help you improve and scale your business to the next level and meet the pros that can help you get there. Real Estate Pros is powered by Investor Fuel, America's leader in helping real estate investors and professionals build the business you need to live the life you've always dreamed of. Let's start today's show. Property insurance for real estate investors doesn't have to be difficult, but it does need to be there to protect you when you need it. MyInvestorInsurance.com not only provides insurance at 15 to 30% cheaper than traditional agencies, it's built specifically for real estate investors like you. You can set up an account in about 2 minutes, get quotes on properties, turn on and turn off insurance for your fix and flip or rental properties in around 2 minutes without having to talk to anyone directly, all through our portal. There's no better way or faster way to make sure you've got the coverage you need to protect you, and no more lengthy policies either. Once you're set up, you're billed monthly and prorated by the day for however long your policy is active. It's powered by MSI, the third largest independent MGA, with 1.5 million customers and more than $1 billion in cumulative premiums written. Get set up today in about 2 minutes at myinvestorinsurance.com/fuel.
Hey folks, welcome back to the show. Today's guest, Aaron Chapman, is out of the Phoenix, Arizona area and splits time between there and the Ozarks of Missouri. Mortgage broker. He's also a coach for investors and really passionate about helping folks set up businesses the right way to be bankable and so many other things. Aaron, welcome to the show.
Thanks, Dylan. Good to be part of the show, man. Always. Any show that people are willing to let my redneck ass on, I'm all about it.
It's great to have you on here. I do want to ask you a lot of granular questions about how to make properties cash flow and how to hold on to them and have it make sense as a long-term hold. I know something that we were talking about before hopping on here. Before we get into that, though, I do want to start at the top and ask you how you got into real estate.
I know that being a short form, it's going to be really tough to get deep into that. Ultimately, I left the mines of northern New Mexico, could not find a job to save my life. I found myself in a situation where I needed to go get diapers for my infant son. I had a coupon for free diapers, but I was also out of gas. So I found myself walking a parking lot of a grocery store to pick up enough change to get some gas to get home. And then I went inside with that coupon. As I'm walking out, I heard the worst thing I could have ever heard in the worst day of my life, which was my own name. Somebody recognized me in that worst time. He invited me to dinner, and then is when he introduced me to that industry in 1997. I started as a telemarketer in December of 1997. Had to shave, cut a foot off of my hair. My mom bought me business-like clothes to try and blend in. And I learned a lot through the process of telemarketing and everything else, to the point at one point in my career in the last 10 years, being the number one guy in the United States in real estate investment lending, in the top 7 in the U.S. for transactions closed, period. And we've experienced a lot of great success with real estate investors.
I want to ask you, I'm a realtor myself. I think the more that I know about real estate, the more that I really feel like lending is, I hate to say this as a realtor, the most important part of any deal. What was it about the lending side that drove you to it versus what I did and what so many other people do is, hey, let me go get a real estate license?
I didn't know enough about real estate at the time. We bounced a lot. I moved over 40 times in my life. And so being settled into one spot and not really understanding the real estate transaction, I understood cattle. I understood going to the bank and dealing with the cattle thing. We cattle ranched when I was in my high school years, but I didn't understand real estate. And so when I was introduced to this opportunity, I was willing to take whatever. And so it was just me being provided with a shot at some sort of revenue because nobody else was hiring. They kept telling me I was overqualified for everything I applied for at that time. So it was really just because there was no other option. And as I started to understand the real estate investor throughout my career, I started to determine the exact same thing. If you don't have the leverage, you don't have the capability to really build a strong, massive real estate business. Sure, you can save up a ton of money and pay cash for things, but that will only return in cash flow and appreciation. You miss out on the amortization, you miss out on a lot of the tax benefits, and you miss out on the ability to compound what a person could take cash for, but actually compound it 5 times over. And then you add in the amortization and the additional taxes, you add another 20 to 30% on your money.
I want to ask you specifically about some of the strategies that people can use to be bankable. Before I get into that, though, I do want to ask you on the mortgage side, when you were starting out, were you primarily working with first-time buyers? Were you working with investors and buyers? Was it a mix? What was the day-to-day like when you were just starting out?
Stop living on an island and join the #1 mastermind in America for professional real estate investors. Investor Fuel is a community of hundreds of the nation's top investors working together to build stronger businesses and better lives. In addition to the amazing community of real estate investors acting as a board of advisors for one another, Investor Fuel members have access to 100% funding on purchase and repairs for our members only, a health insurance program, and benefits and discounts that more than pays for the membership of most of our members, meaning it's actually costing you money to not be a member of Investor Fuel. If you're looking to scale your business and build a business that allows you to live the life of your dreams, please visit investorfuel.com today and book a call with our team.
Initially, it was refinances on people's primary homes. It was really, really, really hard to develop a relationship in the real estate space, get somebody to send you their client. Because again, you know how tough it is to get a name in the real estate space that's going to actually close. So the amount of energy and time you put into sourcing a name that will literally close on a home and trust you to do that, you need to find somebody you can trust on the money side that's going to uphold your name. So it took me a long time to develop enough understanding of the process to get somebody else willing to put my name next to theirs and trust me with that transaction, which is like you said, the most important part of the transaction. Otherwise,
Yeah.
nobody gets anything. If I screwed it up, nobody wins. But if I do well, I'm earning the next shot. That's all I'm doing. And so, with respect to that whole situation there, it really wasn't, I just took whatever I could get. So it started
Yeah.
off as refinances.
Let me now pivot to this idea of being bankable, but also without giving away all the gold, Aaron, but maybe some of it. When folks are thinking about, hey, I want, passive real estate, or I want to get into real estate investing, I'm not sure where to start. Is there a couple foundational pieces of advice that you generally give folks?
For me, well, what I scream to the whole world is set up your team first before anything. Know who you can trust, because I realize that it's being sold as a passive real estate investment opportunity. In reality, it's a business. You are the CEO of a real estate investment business. And for a person to shop around and find the cheapest of everything, it's like the CEO of a big corporation trying to find a COO, a CFO, and a CIO that's willing to take minimum wage. That company will not be successful if all you are is trying to find the cheapest of everything. You can find success, but you can also limit your success significantly to what your understanding of it is. Like I said, I have nearly 30 years in this industry working with thousands of people. I've seen where thousands of people have been successful, thousands of people have failed. That particular amount of experience is so valuable that when a person says, I found a guy who has an 80% lower interest rate, would you pay that extra eighth on $100,000? That's an extra $6 a month to hire somebody that's always available to you to talk you through a scenario that could possibly be destructive to your business? Or would you rather go with the other guys and say, hey, I just got a really cheap rate and I work for a bank, but knows nothing about real estate?
Yeah, it's a huge difference. I mean, I would think most people, when they take a step back and realize what they're getting themselves into, would say, I want someone who's going to be able to consult with me on some level. I do want to ask you about asset classes or niches that people may be looking at. If someone is new, let's say they're a teacher, firefighter, you pick the job, right? W-2 job. And they're looking at, single family, they're maybe thinking Airbnb, they may be thinking, what about midterm housing, nurses or transient people, but also looking at other asset classes like self-storage. Is there an asset class that you're particularly bullish on or that you guide people towards?
If you're looking for consistent, high-quality leads, look no further than Investor Machine. Investor Machine isn't just another agency, it's the most sophisticated, data-driven lead generation company on the planet for real estate investors, and serves the role of being not just a lead generator for your business, but a marketing partner that is helping you achieve your goals along the way. Go to investormachine.com to learn more and schedule a call with our team today.
I am unbelievably bullish on the single family up to the 4-unit. The reason I am is because how easy it is to get in and how easy it is to exit. And when you're also talking about those exits the risks are not as big as a commercial exit, right? The losses that you take are isolated a lot more than any losses you might take on a commercial exit. The other thing of it is understanding it takes time when you're talking about a commercial asset versus a single family. Everybody understands a single family, and duplex, triplex, fourplex is easy to understand as well. So for me, it's helping people to one, be able to evaluate a deal, and you got to walk before you run. And you'll also find there's a reason why the hedge funds are buying up so much of the single family housing out there. An opinion of mine is it can be and may actually be the most valuable per square foot real estate that exists. But one thing we're also finding is they're not building a lot more of it. COVID, that whole window of time when it limited at all the materials that we needed, and of course it
Yeah.
impacted jobs. That really had a big dent in what we had as far as the available housing that was out there. Now they're going vertical. There's a lot more apartments being built than actual
Yeah.
family homes. So when you consider that, you have a very, very, very desirable asset. And it's a desirable business. Every single one of those is its own separate business. You need to treat it as its own separate business. So I believe if a person learns how to run that business, which you could divest to somebody who needs to buy a house to live in, then you can learn a lot faster on how to operate in the real estate space. And you're very, very, very bankable in that space.
I want to get a little granular on this idea of being bankable, but and also cash flow too, if we can hit on both of these ideas. For our audience who may not be aware, when you say bankable, can you break that down for us?
So when you're trying to get leverage and buy properties and invest in real estate, you need to be able to show a certain amount of strength financially and credit and assets to be able to purchase that and have somebody being willing to invest capital into that. And think of the real estate, the banks who lend on real estate, think of them as a business partner. You are attempting to go before attract a business partner that says, listen, I can put up 20% of the capital to purchase this business. I need you to put up 80% of the capital. Traditionally, if you have a partner, that 80% would mean they have 80% ownership in the business. But in this scenario with the banking world, they've arranged it where they don't get 80%. They don't get any ownership. They get to put a lien against the property and say, hey, we need to get paid back. And we're going to demand, say, 7% of that 80% in monthly installments over the next 360 months, but we don't get to own the business. You get the cash flow from the business. You get the appreciation of the business. You get the fact that the people that you're selling to are paying us off and getting us out, and then you get the tax benefits associated with it. So all the way around, being bankable means that you get to use somebody else's capital to acquire a business. A third party is going to pay back the partner, but then also pay you on top of that. And then you get you get to retain the asset and the ownership and all the benefits of ownership that it comes. So, and then when you talk about the bankable side of it, qualifying for this, being able to get that partner to come in with that capital, how do you do that? There's a lot of great strategies out there, but sometimes those strategies put you in a position where you can't get that, where a
Yeah.
lender's, oh, I'm sorry, we can't qualify you. Being able to understand how you qualify in advance of going into a deal is absolutely paramount. Working with somebody that understands what your objectives are and how you want to become qualified and what you want to build and how you want to build it is an absolute necessity, because if those people don't understand that, they can't get you approved to get that leverage. And if you can't get that leverage, you're going to be subject to only what you can personally invest in.
If you're a new or newer real estate investor looking to launch or grow your real estate investing business, please check out Investor Fuel Club. It's a coaching community, but unlike anything you've ever seen before. And you can actually partner with members of our mastermind from coast to coast on deals right in your market. There's no better opportunity to build a consistent business than to literally partner with pros to help you avoid costly mistakes, avoid the need for capital to do deals, and help you eliminate your fears as you're starting your business. Learn more about Investor Fuel Club at investorfuel.com/club.
Now, when we're talking about, the single family space in particular, it's interesting, this conversation, because a lot of the folks that have been on the show, quite frankly, have used, hard money loans. They may be working with partners and they may have a syndication, but it's less common that I hear people talking about this idea of using traditional financing to purchase, lots of single family properties, which is ironic because that's probably the most common way, right? Do you find that most people that you're coming across, whether they're newer investors or established, are not thinking immediately, hey, I need to be bankable? Is this an afterthought to a lot of people?
It has become much an afterthought because people have found different ways to scale quickly, utilization of other forms of acquisition, such as like the harder money or syndications or partnerships, those kind of things. They don't realize there's actually structures built right now in the banking world for all of those who are doing that to get into the single families, duplex, triplex, fourplex, and some that are actually a little bit larger if they want to go down that path. With 30-year fixed money, we can finance your LLC. You don't have to have a history with that LLC. It doesn't have to have a tax return. We just go off the property's ability to generate revenue. And we have figured out in the banking industry how to qualify those properties and help you to get into deals. So a lot of your wholesalers, a lot of your flippers, these guys will look back on their history, and you may have the same. They're like, man, I should have kept that deal. I should have kept that deal. Well, I'd have a huge portfolio if I kept these five, right? Well, we're helping people identify how do you do that. And then when you're ready to do that, let's say you own that property currently in an LLC, but you want to be able to hold that for 30 years and pay that little minimal interest. And actually,
Yeah,
when you get down to it, you're not even paying that interest because the dollar is losing so much value. It's losing
it's
so
true.
much value. You got somebody set up, and we can get into a deeper conversation later. I'm actually have props to do that if we want to talk about it, but I don't think we have the time. So when you look at that, there's a way to be able to sell it to yourself and get bankable with 30-year fixed money. There's a process. You need to have the right entities in place. You need to be structured well in advance with the right attorneys, the right CPAs, and the right lender. Often people find an attorney that can help them do one thing in one state, a CPA to help them do some other things, but doesn't understand real estate investing. They all have different ideas that nobody talks to each other and puts you as the investor in the middle. And then the lender has it all, says, this is all screwed up. We can't do anything with this. The CPAs I work with, that are national CPAs, the attorneys I work with that are in all 50 states, and myself, we all communicate together for you. We can help you set it up to ensure you have the entities you need, you have the backing you need from the tax strategy perspective, and we all communicate as far as the lending is concerned to ensure that you're bankable, it's scalable, and you can hand it off to the next generation without those tax liabilities that everybody's so scared of.
I want to ask you a little bit about this idea of hard money and these alternative resources that people are using. I mean, it's not exactly a walk in the park to get those set up either. I mean, when you talk about hard money, I come from this space, right? If you're brand new in flipping, you're going to have to partner with somebody. They're going to have to know you. You have to kind of get someone to sign for you effectively. So it is interesting that people have been using maybe more of that than traditional. Is this information, the traditional side, readily out there? Are banks, kind of keeping this behind a cloak and dagger, or is there just kind of the social media phase, is people moving away from traditional and more to these other alternative financing methods?
I think that the reason there's a lot of the alternative financing methods because those are the guys who let's put it this way, they make a lot of money per transaction. We all know that, right? So their voice is very broad, very loud, and they're the ones you walk to a trade show, there's a ton of them. When it comes to the lending industry, as far as the banks are concerned, there's only a few of us that understand this. There's a very small few. There's a bunch that are jumping into it, wanting to be
Yeah.
part of it, but they don't have the history. When you've been doing this since 1997, as long as I have, you've seen a lot of the cycles, a lot of things that hit real estate investors. You understand it differently. And we understand how to properly use hard money to help that person springboard into a transaction that you can flip into a long-term deal. And ultimately, in many cases, I've had many clients have less than 10% left in the deal of their own capital. So if you're buying a property and you have less than 10% left in the deal, consider what the return on investment is on that. It becomes significant. You're talking 50% returns per year on your capital invested. Now, there's a way through it, and we coach them through it because I do it myself. I have property in 6 states. I start with myself that has a family trust. The trust has holding companies. The holding companies start LLCs that buy houses. Every single member of my family that's an adult, and I have 3 grandkids, we all live in houses that are owned by the trust. We pay rent to our trust. I lease my house from my trust. I lease my vehicles from my trust. I own nothing. We are here to help people do exactly the same and then pass it on to the next generation, because one of something, guys, they will not have a shot at it at all if we don't change it now. You have to
Yeah.
change today for your children and your grandchildren and bring them part of it. And that's what I do with my partners in the legal side, my partners in the accounting side, and then of course, all of us in the banking side and my entire team.
No, you're exactly right. I feel like in a lot of ways, it's people may feel like they don't have a shot right now with where, I'm from Northern New Jersey. We were talking about this before hopping on. There's a lot of people who are, a lot of people who are priced out over there. We are coming up on time here though, Aaron. Where can folks go to reach out to you directly? Maybe they have deals they're looking at, or maybe they are interested in becoming an investor, starting a real estate business, but not sure where to start.
So just go to aaronchapman.com. That's the website you'll always find me at. And then you've got info@aaronchapman.com is where you can email me. My assistant, Bree, watches that email. She'll get us set up on a call. And then that way you can sit there and figure out what is the way we can best set you up to springboard you into investment real estate and be able to keep as much capital for yourself. All those things we talked about before, they have place, but they need to be in the right place. If they put in the wrong place, it can cripple you as a real estate investor or as really just a business builder.
Right. Aaron, thank you so much for coming on the show here today.
Right on, buddy. Thank you.
Thanks for joining us for today's Real Estate Pros Show. You can learn more about the amazing benefits of the Investor Fuel Mastermind community, including surrounding yourself with hundreds of other rock stars, 100% financing for your deals, and members-only discounts from vendors you're likely already using that, as a member of Investor Fuel, will save you more than the cost of your membership. Visit investorfuel.com to learn more. If you're interested in joining us as a guest of this show, please visit investorfuel.com/pros to apply. You can also check the show notes for access to free resources, how to get access to world-class lead generation, and much more. Don't forget to subscribe so you never miss another episode. Have a great day. We'll see you on the next show.